Hi, this is Zak Mir with the Bulletin Board Heroes on Friday, the 17th of August. Starting off with Airea, which has the classic setup here with a vertical move higher, a golden cross signal between the 50-day and 200-day moving averages, and then the bounce off the 200-day line. Subsequently, after an extended consolidation, situation at the moment is that while we're above the floor of this rising March trend channel at 50p, we're looking for a best case scenario target over the next 2 to 3 months towards 90 pence plus at the top of this year's price channel. Ideally now the shares will not fall back below the 50-day moving average at 53 pence. It's been a long wait for bulls of Coro to get any pleasure or excitement, I would say, over the last few weeks and months. But the situation now is that we've got decent activity here with this V-shaped bull flag above the 50-day moving average at 3.37 pence. While we hold above that 50-day line and the floor of this rising trend channel from April, the target here on a technical basis could be as high as 5.25 pence over the next month or so. Distil is next, and here you can see that we've got a similar situation to that of Coro with the bounce off the 50-day line. Also here we've got support from the 200-day moving average, the black line there at 2.25 pence. And really the view here is that while we hold at least above the 50-day line at 2.39, the upside here up to 4.25 pence for these shares. Decent consolidation that we've had should lead to a breakout over the next few sessions. Going on to an old favourite of the Bulletin Board Heroes, IOG, Independent Oil and Gas. Here we've got what looks like a new attempt to break to the upside, a gap above the 50-day moving average, normally a very good signal, and that 50-day line at 20.97. So while we hold above that, looking for a target 38-39 pence over the next month or so. Stop losses below that 20 pence level, probably the best at the moment. Oilex, obviously we've seen this jump very strongly, but it's worth looking at the structure here where we've had what it was a falling wedge breakout that we had just a week or so ago at 0.15, 0.16. But interestingly enough, after there's been a bit of a rodeo ride for the shares with this V-shaped formation. Looks like second time lucky. It'll be second time lucky for the bulls in terms of the break above the 200-day moving average at 0.22, especially above that, looking for a target as high as 0.35 over the next few weeks. Stop loss is difficult, but we shouldn't see the shares back below the 50-day line at 0.17. One of the most difficult situations around has been Powerhouse Energy from a technical perspective, kept having these full storms above the 50-day moving average going into July, and that was all when the shares were around the 0.5 level. Obviously, we've had the fall since then, but looks as though we've got a falling wedge breakout, which hopefully will have some momentum on the upside. 0.41 is the 50-day moving average, and it's backed by bullish divergence in the RSI window. So stop losses below 0.3, initial target of the 50-day line at 0.41. And obviously after that we've got that falling 200-day line above 0.55. Always exciting to look at UK oil and gas just to see what is going on there. At the moment, looks as though we've got a bounce off the 50-day moving average just around, or just below rather, current levels. You can see that there around the 1.8 level. And really while we hold that in this uptrend line from June, we could see a push back towards the best levels of the last couple of months at 2.5 pence plus. If you're cautious, maybe wait for a break of the 2 pence level. There is some resistance here from the end of last month, so maybe wait for that particular area to break. But while we're above the 50-day line, little problem in terms of the technical situation, and the 50-day line there at 1.84. Finishing off with a stock which has also been a bit difficult over the recent past, Vela. Here we've got what looks to be not only a bear trap rebound, a bear trap from below the 0.4 pence level and former June and July support, but also it seems that we're in a falling wedge formation. Just needs to crack that 50-day moving average at 0.48 really to take us back up towards the target here, which would be the 200-day moving average at 0.61. That's it from me. More updates on Monday.